What's up everyone? In this video, I'm going to be explaining how to use edgeful as a futures trader. I'm going to be covering how the sessions work, I'm going to be covering the most popular reports, and I'm going to be telling you exactly how you can use edgeful to start to make money. So, I'm going to start off by just giving you a quick run through how everything is laid out so you know, so you have a feel for when you join. Here is our asset selector. If you're a futures trader, obviously you're going to be in the futures section. All you have to do is click on it. Right here is our nav bar. This is your steering wheel for the entire site. This is how you do everything right here. We have three different report types. We have price action reports, volume reports, and indicator reports. We have the most popular, which just regroups the most popular reports. We have different categories here for scalpers, day traders, and swing traders. This also just regroups the reports based on your trading style. So for this sake, I'm going to be sticking to price action for this video, but we also have favorites, which I'll touch on later in this video. Here are all of the price action reports. You can see I have price action selected here. These are all of our price action reports. We have new ones coming out every week. We have something for every trading style. If we don't have something that you want or that you use, you can request a report idea. So you just open up this sidebar. This is how I did it, this little arrow right here. All you have to do is click on report idea and send us the idea that you have. Obviously, the more detail, the better. So here we have our asset selector, the actual tickers. We have everything. If there's something that we don't have in here that you want to use, just let us know and we'll add it. We're looking at the New York session here. In this case, this is our session selector. And in this case, we have New York, Tokyo, Sydney, London, daily, and a custom session. So I'll cover custom sessions in just a second. We also have the date range. So this is how far back you want this report to look. It's defaulted to 1 year. You can look at 3 months. You can look at 6 months too. Here is our custom session selector, or custom session builder. So I'm going to delete this for a second. I'm just going to hit save. And then here you can see, if you click on this drop down, you can see what you're doing. So you're recreating your open and close. I will explain everything in just a second. If you want to add your own, just click on this plus, and let's say you want to trade an early New York session. I'm going to go to New York early, change this start time to 8:30, click save. Now you can see I have my new session here. If a report has these bubbles under here, this is sub-reports. These are little variants of the reports. So we're obviously looking at the gap-fill report here. You can see we have the standard, by size, by weekday, etc. I'm going to touch on these sessions quickly because they're very, very important. So here we're looking at RTY, which is what we're looking at here, RTY, and this is Tradingview. You can see I have these blue boxes. And this is our edgeful market sessions indicator. So you can see right here, market sessions, this is the one that I'm referring to. The way that you get access to this is you just scroll down, you click on this get access now. You can see I have my Tradingview username in here, not my email, my Tradingview username. The way that you find yours, you go right here, you can see Tradingview username right here is edgeful, put that in here, and you're going to get access to all of the Tradingview indicators that we have and all of the new ones that we release. So the way that you find them, if you've never had invite-only indicators before, you click on indicators, you're going to see this pop up here. If you're having an issue displaying these on your charts, just refresh your Tradingview, because if you can see them, then you have access. So all you have to do is refresh, Control-R or Command-R if you're on a Mac. So in this case, I'll just restart here. I'll delete this so I can show you. Go ahead and go to market sessions. And what this shows you is the outline of each of the sessions, Tokyo, London, and New York. I'm going to change the settings, and I'm going to remove Tokyo and London. And you can see you can also have the choice to change the start and end times if you do have a custom session on edgeful that you want to change. One thing I'll note is these are not linked. So if you have an early start time on edgeful, and you want to do your New York early, you need to make sure that you remember to change the start time here to 8:30 and not 9:30. They're not linked. Reminder, they're not linked. So you need to make sure that you're looking at the proper session start times. So When you are looking at the New York session, you are looking exclusively at the data between these blue boxes. So inside of these blue boxes, right here. So the New York start at 9:30, the New York close at 4. You're ignoring the data here, the data between them, the data outside in the London session, in the Asian session, in the Sydney session. It's as if this data doesn't exist. So I'll explain kind of what that means and how that applies to you right now. In this case, the gap fill, and I'll touch on this report actually a little bit more in detail in a second, but this gap fill report refers to the previous day's close to today's open. So if there's a gap up, that means that today opened above yesterday's close. So in this case, you can see the previous New York close is right here. So I just marked out previous New York close. We're looking at the New York session. So you need to be paying attention to the New York close. And now this New York session opened above this previous close. We're ignoring this data right here. We're ignoring this price action between the New York sessions. Imagine it doesn't exist. Now, 61% of the time in the last year for the Russell, prices come down to touch the previous session's close this day. 61% of the time, you want to have a short bias, and that means that it will touch this point within this New York session. Very, very important. If it does not touch in this New York session, it counts as not filled, and it does not matter if it fills 3 days later. It will always count as not filled. We have this only counting from today and yesterday. And then today it'll be always, it's the day, it's like an inch worm. Today to yesterday, tomorrow to today, etc. So just before I go into how to use that report, I just want to walk you through how everything else is laid out, and then we can go into the gap fill report. So here we have just explainer charts. We have gap up, gap down, gap up that fills, gap up that does not fill, etc. So we have all the little variants just so you can see a quick explainer chart. We have some explainer text here, just right over here. And obviously the Tradingview indicators, which I just covered. We have explainer text here on what exactly it's measuring. And then here, very interesting, is a table that shows you all of the days that make up these results. Then down here, we have the chart. This is the Tradingview chart that you can see. You can click on one of these days and it'll actually show up on here, so you can see the price action from each of the days in here. And then finally, the video. These videos are very, very important. They will show you exactly how everything is measured, how to use it, how to apply it in your trading. And if you ever have any questions, the video will most likely answer it. Okay, so now that I went through how everything is laid out and I went over the sessions, let's talk about a couple of the most popular reports. In this case, I'm going to talk about the gap fill report. So we just plotted these lines out. This is your gap fill. So you can see here, there's a gap up. Price opened above the previous New York close. That's a gap up. So the way that you use this in your trading is you see, okay, is there a likelihood that this gap will fill? As a reminder, a gap fill is when price comes down to touch the previous day's close, which means that in this case, obviously 61% of the time it will fill today. So you want to have a short bias targeting this area. And then if the opposite is true, in this case, for the most part, the gaps down will also fill. So if price opened below, a gap down would be, I'll just flip this chart just for the sake of saving time. So let's pretend this is previous day's close. I just flipped this chart upside down. For those of you who don't know, I just inverted the scale. Previous day's close, price opened below, and now you can expect price to rise and touch the previous day's close when there's a gap down. So pretty much the way that you use the gap fill report is you want to be targeting the previous day's closing price if the likelihood of filling is large. We have a by size and by weekday variant of this report. We allow you to pick the certain filters of the sizes. So you can see as the gaps are smaller, there is a much higher likelihood of them filling. As you go up to larger gaps, the likelihood of filling starts to decrease. So let me show you how to identify which day to pick. So let's look here. What I'm going to do is I'm going to delete my little arrow. Now I'm going to go to the measuring tool here. I'm going to go from the previous day's close to this open. So you can see I'm at the 0.32% right there. 0.32%. I just used this measuring tool on Tradingview, and you can see 0.32 puts me in this category. Very high likelihood of filling, and the reason it puts me in this category is it's between 0.2 and 0.39. I'm at 0.32, so that falls right here. Very high likelihood of filling, so my bias here should be very strong because the gap is relatively small, so it's more likely the price will reverse. Now, we have the bi-weekday report here, and you can see that 53% of the time on Mondays, gaps up will fill, and then 70% of the time, gaps down will fill. So price is very bullish on Mondays when price opens below Friday's close. So let me show you an example here. Let me try to find an example. Well, just for the sake of time, I'll just explain how this works. You're always referencing the previous day. So if you click on Tuesday, it's checking where does Tuesday open relative to Monday's close. If you click on Thursday, you're checking where does Thursday open relative to Wednesday's close. If you check Friday, where is Friday's open relative to Thursday's close. So this allows you to have a little more granularity in what weekday you're trading, because clearly, as you can see, they all behave pretty differently. So that is the bulk of this report. Now, the one thing I do want to touch on, which is very important, is the customization. So right now, we have, I'm just going to zoom in here so you can see this clearly. We're looking at a gap fill percentage of 100%. So that means that in order for the gap to be considered filled, you need price to retrace all the way back down from here and touch this closing, this previous close. But what if you have trouble holding on to your trades and you want to be targeting half of the move? So in this case, you can see what I'm going to do here actually is I'm going to do this again, and I'm going to take this gap here. So you can see that the gap is 6.5 points. The halfway line is this red line here. I'm going to put this line here. I'm going to make this red. That's halfway. So now what this allows you to do is change what you want to consider the gap fill. So a percentage of the gap fill. So here I'm going to click 50%, which means that I only want price to move halfway to the previous day's close or previous session's close in order to count as a fill. So here I want to remind you, 60%, 56%. Let's see what this changes to. Now, you're talking about almost 80% success here if you just target half of the move instead of the entire move. So if you have trouble holding on to your winners, if you have trouble holding on for bigger moves, just target half of the gap size, and now your win rate will increase a lot, to be honest. 80%. People love 80%. I mean, it's such a high win rate. I mean, it's hard to lose money, honestly, when you have this high of a win rate. So you can obviously change this to be 75% or whatever percentage you want. If you want to capture more of the move or less, you can do that by just changing this here. Okay. If you have any other questions on this, just make sure to watch this video. It will be very helpful. Now, I'm going to go to the outside days report. This is another one that is very, very popular. So now I'm going to go here. I'm going to clean my drawings for a second, fix that. Now, a bullish outside day is when price today opens above yesterday's high. Again, I'm going to go over the sessions. This is very important to futures traders. You can see I'm looking exclusively at these blue boxes right here, 1 and 2. So yesterday's high is right here because I'm referring to the previous New York high because I'm on the New York session. If I wanted to look at the previous London high, for example, I would just do this. And you can see here, the previous London high would be right there. So I'm just going to put it back to New York. And I'm going to mark out my previous day's high. And now very clearly, price opened above the previous day's high. right? So right here, price opened above this high. Now 60% of the time, when we have a bullish outside day, which is when price opens above the high, it will reverse back down to touch the previous day's high, this previous session's high, this red line right here, which means that you want to be bearish targeting this area. You want to have a short bias targeting this point right here, this yesterday's high. Same thing goes for when we open below yesterday's low. So again, I'm going to flip this chart upside down just for the sake of time. You can see here, this would be yesterday's low. We open below yesterday's low, and then price comes up to touch this area. So the edge is a little bit bigger here on the bearish outside days, but if you go to ES or NQ or gold, the results are pretty different. So just make sure to check those out. Just go through, kind of play around with it, look at the different tickers, look at the different sessions, and make sure to look at the different time frames as well. One thing that I'll actually mention about the time frames, this date range, really, really important, is looking at this once is not going to help you, because every day there's new data, and this updates every single day. So every time there's new information, that gets added in, and because we use these trailing periods, one day will fall off the back. So you always get the most recent market environment in edgeful without having to do anything. We always capture the most recent data every single time it happens, and the old data gets dropped off. So you always get the most relevant data to the current environment, so you're not using data from 20 years ago, which is no longer relevant for trading purposes now. So really important, you want to be looking at this every day because the results do change pretty drastically. So just kind of a side note that I wanted to mention there. So here, the outside days is something very simple setup, very easy to take, very easy to trade. The bias is there, and this is one of the most popular ones that we have, is this outside days report. Some of the other ones that I will touch on is the green and red days by weekday. This one helps you with a certain bias. In this case, the Russell really doesn't have too much of a bias in a certain direction, but certain assets and other ones that I won't specify here have very high green days earlier in the week. And what that does is it can give you a bias in a certain direction to say, okay, well, Mondays are more bullish or Fridays are more bearish or whatever it is. This allows you to see, I want to be going with the trend for the most part. Now the customization here is open to close. So the way that you measure a green or red day in this case is from 1 day's open. Let me just clean these drawings. 1 day's open to the close. So in this case, price went up, that would be a green day. Then if you do previous close to close, it just means did price close above or below the previous day's closing price. So in this case, even though this was a red candle, technically, daily candle right here, because price closed lower than the open, it was a green day if you use this customization, previous close, because it closed above this area right here. So for the most part, futures traders, I know that you guys look at open to close. The other one is more for stocks, so just keep it in mind. But you can use it either way. It's up to you on what point you want to look at. So it doesn't matter which one you use actually, but I just wanted to point that out. So what's nice about when you see the results a little bit more 50-50 is that if you do have a bias, if you heard something on a YouTube video once saying, oh, well, you know, Fridays always close green, and now you internally have a bullish bias on Fridays, it's not something you want to have because you know that it's actually more of a coin toss. So this is not something, that bias you have is not something you want to use. So what it's doing is it's eliminating a bias you might have, so you need to focus on other confluences to make your trades. Okay, let's continue. So I'm going to talk about the opening range breakout here. And what you can see in this case, I'm going to go to my indicators again. I'm going to go to my orb. Now this automatically plots the high and the low of the first 15 minutes automatically on every day. So what you can see, I'll just try to find a good example here. So let me just talk about the results first. 27% of the time, now I just want to point out I have the throughout day customization on, and that means that it checks all of the entire day. So for example, 27% of the time, price will only break out of one side of the orb, which happened here, only to the downside. It never got back to the top side after the orb was formed. 33% of the time, it will break down. So in this case, sorry, breakouts, which would mean if price only broke out to the top side. Breakdowns means that this would happen. Now, very importantly, double breaks means that price will do something like, I'll actually just show you an example. It means that price will do something like this here. There were a couple other examples, but this one, like for visual purposes, is better. So you can see this first candle is the opening range, and you can see it broke out to the top side and then reversed and broke down to the bottom side. So that happens 40% of the time. So the most amount of time, it will break both sides. Very, very importantly, it will not break either side practically 0% of the time, almost 0% of the time. So you want to be targeting one side of this orb to break, you don't want to expect it to stay. Let me just do this. You do not want to expect price to stay in the middle of this orb for the whole day. And again, importantly, we're looking at the New York session, which means that it stops considering the rest of the price action after the 4 p.m. close. Now, I'm going to change this here to same candle. And what this is measuring is, same candle means the first candle that breaks the orb breaks both sides of the orb in that single candle. So let's see. Now, this is very unlikely, you can see. So let me move that. So you can see, I'll go to, this example is fine. You can see that price broke out to the top side. What this is measuring here is if this candle that broke out to the top side also came down to break to the bottom side in the same candle. So this is definitely more on like the scalping side of you want to expect continuation within that one candle. It's very, very unlikely that price is going to reverse all the way back down. So that's how you use this one. For the most part, this throughout day is a lot more popular. You can also change your orb times from 5, 15, or 30 minute. We also have this by weekday, so you can check certain weekdays if they behave differently. So you can see Thursdays much more likely to double break, probably because there's a lot more volatility, and you can just go out and see. Obviously, the results are very different for ES, NQ, gold, and oil. If you trade those, make sure to check those out. Now, here, the by performance variant, excuse this rounding, we got to round that, but the by performance variant, let me just go back to that one day here. So this checks the performance after it breaks out from one side or the other of the orb. So in this case, I'm going to click my little ruler button, and then you can see that when it breaks down, the average move down is negative 0.6%. So what I'm going to do here, now it's from, very importantly, calculating from the low of the orb. Now I'm going to go 0.6%. So this is the average move that you can expect when it breaks down from the orb. So how do you use this? This is something you want to set your profit targets within this area. You can hold runners beyond this area if there's a lot of momentum like there was here today. But for the most part, you want to be going for the averages. You don't want to be going for home runs every day. So putting your profit targets in this area is going to help you a lot. Same thing goes for the top side breaks. Now to the right here, we have the single biggest occurrence, the single biggest move that has happened. So 3% to the top side, 2% to the bottom side. And the reason that we have this is so you can have some realistic expectations of, I don't want to expect a massive, massive move down from the orb, low or high, because this is the single highest instance in the entire last year. So pretty much, you don't want to be targeting these areas is the thing that you want to take away from this. We also have, obviously, the explainer graphs, as usual. Now, this one, the buy RR, is actually really interesting, and we should have an indicator here. for it. It actually is not released yet. But what this shows is if you were to take a trade right here, so we can see the buy RR right here. You can see that this orb is just, let's just call it $9. So now if I do this, I'm going to put $9 here at 58. I'm going to put, okay, so I'll just do this. So at 58. And I'm going to do another $9 from here, which is, we have an indicator for this, so you won't actually have to do this, thankfully. But I'm going to do it right now just for the sake of this explanation. And I'm going to do one more $9 again. Okay, 39. Okay, roughly 39. Okay. So what this report does is it's telling you if you were to take a trade here, short the moment that it breaks out of the orb, and now you set a 1R stop loss, like right here, for example. I'm just going to put my stop at the other side of the orb, and I put my profit target at 1R. Your success is 36%. There is a 36% chance that price is going to reach your profit targets of 1R. And then the R, the risk here, is the opposite side of the orb. There is a 14% chance, and I'm at the downside here, that's why I'm over here, that's because this one broke to the downside, the upside one is right here. There's a 15% chance roughly that price will get all the way down here, and I'm going to explain what I mean here. If price does this and then stops you and then reverses back to the top of the range, that would mean that you get 1R, 2R, but you don't get the 3R. So I'm actually going to show you with this example here just very quickly. You can see that price did get to the 1R and 2R, but it never got to that 3R. It never got all the way down here. So in this case, this day, the actual results is it said success here, and then failure here, because it never got to this 3R. If you want more details on this report, honestly, I recommend watching this video just because it goes through the entire thing. But this one's actually really interesting if you're more of a systematic trader and you want to just take your trades as the levels break. This is a really good one. Let me just go to the most popular actually, so we can quickly cover some of the ones that we have. The previous day's range, market session breakout. This is a really interesting one. Market session breakout is specific to futures traders. I'm going to clean my drawings, I'm going to remove my orb, and I'm going to put on my London session. Okay. So, what this report measures is, I'm looking at the London and New York here, how often does New York break out of the London range? So you can see that for the Russell in the last year, 65% of the time, price is going to break out of one single side of the London session. Only 4% of the time in the entire last year has it broke out of both sides. And then 31% of the time it hasn't broke out of either. So what this means is you wait for the London session to close, and then now you can see price breaks only to the bottom side of this London range. So here you can see London high, London low. Let me just zoom in here. London high, London low. This New York session only broke out to the downside, so that's one single break. So the way that you use this is to say, once one side breaks, I do not want to be targeting a reversal all the way up here, because that has only happened 4% of the time in the last year. So pretty much once price breaks to one side of this London high or low, you do not want to be targeting the opposite side. You're playing a losing game. Let's show you a different example. Here is another one. The London high is here. The London low is here. New York breaks to the one side. It did not retrace to the top side. So this is how you use this report, and we also have it for Tokyo and London. Make sure to look at this for ES and NQ. It's a very interesting stat. The other one that I'm going to show you here is the market session correlation specific to futures traders, right here. So, what this shows you is that the relationship between the London session closing green and the New York session closing green is very high. So in the last year, every single time the London session is closed green, the New York session is also closed green 72% of the time. The same thing for when London closes red, New York will close red 73% of the time. So you can see here, I'm just going to go from the open to the close. You can see that was red, obviously. Open to the close, also red. From here, open to the close, positive move. Open to the close, another positive move. Here's an example of where it did not work. So London session was green, and then New York session was red. So just looking at the London session here as a futures trader can give you so much information on how the New York session will close. We have the open to close. Again, we have the previous close to close. For futures traders, I think that most of you will stick to this, so I would recommend just sticking to that, meaning the open to close variant. And I'm going to touch on quickly a volume report. That's one of my favorites. I think honestly is one of the most underrated reports in my opinion. And it's in the volume report type. It's called the volume and range by weekday right here. And what you can see is that each weekday doesn't behave the same. And what this report does is it measures the average volume by these blue bars and this average range by this white line. Clearly, you can see an increase in volume and range as the week progresses. So what that means is the environments are different. Mondays have the lowest volume and range of any weekday, which means there's more likely to have choppy price action, very high likelihood of having a lot of wicks, a lot of fake outs, not a lot of continuation, and the low range literally means less opportunity because the high to the low of the day is smaller. You go later into the week, volume increases, range increases. So what this does is it means that there's more continuation, price action is smoother, price action is cleaner. So focusing on trading these days where there is higher volume, and it's obviously different for every asset, but focusing on trading the days that have higher volume and range will make your life a lot easier. Avoiding the days with low volume and range will help you avoid a lot of losing days, a lot of those frustrating days where you're sitting around getting chopped up. Highly recommend watching the video here. This shows you exactly how to use this. This is a brief touch on the type of things that we have here in edgeful. We also have a bunch of indicator reports and relating to ATR. The ones that I would recommend, just as I go through this quickly, that I would recommend you watch is the fair value gaps. For those of you who are interested, very interesting report. The gap fill, green and red days by weekday, green and red streaks for swing traders. High and low by weekday is a very, very, very interesting one. I highly recommend looking at that one too. The initial balance is very similar to the opening range. It's just instead of the first 15 minutes, it's the first hour. Market session breakout we covered, market session correlation we covered, orb we covered, the opening outside days is another interesting one, opening week range for swing traders is a great one. Previous days range and previous week's range I also highly recommend. I know that I'm going through a lot of them, but they are very valuable, just kind of depending on what your trading style is. Volume and range by weekday is the one that I covered. Depending on if you trade other sessions outside of New York, I would recommend looking at this session volume by weekday too. And then the indicator ones, ATR is a great one. Pivot points, another great one. We just added this TPO report, which you can definitely watch the video for. It's a little bit more lengthy, so I would recommend, or a little more, it requires like some more explanation. So I would recommend watching the video there. And if you have any questions, you can reach out to our support here. Again, if you have any report requests, please reach out. We also started building Tradingview indicators if you'd like, so please reach out about that. We have a free Discord, completely for free Discord, and you can join that right here. If this video is helpful to you, please like, comment, subscribe. It really helps us out. And please make sure to follow our Twitter. It's at @edgeful. So you'll see all of our new updates there. Everything that we do is shown right there. So thank you for watching. I really appreciate it. Have a good one.